What is Kadena crypto and is KDA a good investment? Every day, a new cryptocurrency project seems to enter the top 50 charts on CoinMarketCap. Because there are so many new projects on the market, it's not an easy task to learn about them and decide which ones to invest in. Kadena is a relatively new cryptocurrency and blockchain project that aims to solve problems on the Ethereum and Bitcoin blockchains. The project has already begun a phase of fast growth, collaborating with many other major blockchain companies on the market. However, this doesn't mean it's the perfect project, so keep watching to learn more about Kadena and whether it's truly worth your investment. In today's video, we'll talk about Kadena, a hybrid blockchain platform consisting of a public chain protocol called Chainweb and a private chain protocol called Kuro. This video will help you answer the following questions. What is Kadena? What are their recent developments? And what does the future hold for Kadena? Are its partnerships and tokenomics strong enough to make it worth your investment? So make sure you keep watching and be the first to get these updates. Remember to like, subscribe, and hit the notification bell to get the latest crypto news, guides, and updates. So what is Kadena? Kadena is the world's fastest proof-of-work blockchain, combining DAG, direct acyclic graph, with POW for maximum output. Rather than relying on a single blockchain, the Kadena Bitcoin wallet combines many blockchains to execute transactions concurrently and non-contemporary. Multiple blocks may be executed simultaneously to increase Kadena's output. Security is also improved because of the reduced time required for someone to get notification of blocked access. A guided open-chain graph is used in Kadena's shared POW chain to grow from one blockchain to potentially infinite blockchains. Kadena's blockchains can only connect with 3 other peer chains since the DAG design is static and multi-channel. As a result, the productivity and durability of its ecosystem are enhanced. Besides focusing on flexibility, Kadena provides legal validation and updates as part of its newest smart contract language, codenamed PACT. Parallel network transactions are carried out through Kadena's Chainweb POW consensus process, which utilizes several individually mined chains. Durability and compatibility for global financial markets are built into the Kadena blockchain technology. It provides more transactions for the same energy input, making it more efficient than Bitcoin. Kadena established a solution to one of the biggest problems companies have while using blockchains by providing a crypto gas station. A gas station is an account that exists only to fund gas payments on behalf of other users under specific conditions. By having a gas station pay user onboarding costs, we remove the friction of acquiring tokens in advance of sign-up, which allows a user's first interaction with a dApp to be as easy as filling out a web form. With 20 blockchains operational today, Kadena can scale to 40 in the coming years. The Kuro, a Layer 2 private blockchain with a throughput of 8,000 transactions per second over 500 nodes, has been built for Kadena. Now, let's see some history of the Kadena token. Unlike Ethereum, Kadena's native smart contract tries to overcome significant flaws with reliability, such as its susceptibility to unlimited sequences and absence of clear validation, by automatically detecting bugs. The pact frees you from the exploits you'll face on Ethereum and other unsafe platforms. A difficult split isn't necessary to update contracts on the pact system at any moment. Kadena has constructed a private blockchain compared to its public smart contract technology. Kadena Kuro, previously known as the Scalable BFT private blockchain, is developed for entrepreneurship use cases and employs BFT consensus techniques. For example, to decrease the time and energy necessary to get and manage insurance-provided data, a medical association has adopted Kadena Kuro. A private blockchain like Kadena's may create fresh information markets and speed up transaction times. Stuart Popejoy and Will Martino founded the project. Popejoy and Martino are the former leaders of JP Morgan's emerging blockchain group and the former tech lead for the CEC's cryptocurrency steering committee, respectively. But what is the use of the native token KDA? KDA is the native cryptocurrency used to pay for transactions on the Kadena blockchain, similar to how ETH is used to pay for transactions on the Ethereum blockchain. And if you mine Kadena, you'll be compensated in this currency for verifying transactions. To compensate miners for finding the upcoming legitimate block, immediate transactions amongst customers, creating new smart contracts, and paying the gas fees for maintaining smart contracts are all possible uses for KDA coins. And how many Kadena coins are there in circulation? The native token of the blockchain KDA has a 1 billion token supply. It's a kind of payment for gas and a way for miners to be rewarded for validating new blocks. Kadena pre-mined many KDA tokens in advance. In 2018, 4.5 million KDA were sold privately for $2.25 million. $12.9 million was collected in the second phase. 215 million KDA tokens are now in circulation, and the frequency of currency production will also steadily decline. Let's see how Kadena network is secured. Kadena connects its multiple POW blockchains using Chainweb. As more chains are added, the total output increases exponentially since every chain validates the blocks of its 3-peer chains. In addition to enhancing privacy, Kadena chains provide a unified overview of trading information throughout the chains. The smart contract language developed by Kadena, the Pact, is a human-readable and transformable dialect designed exclusively for blockchains with solid protection. On the hourly level, Kadena coin is trading now for $0.98 as it challenges the lower sliding trend on the regular chart for strength. After several failed efforts to overcome the obstacle, the currency has reached a critical stage. So, can you mine Kadena? Because Kadena is a proof-of-work protocol, it can be mined, which sets it apart from most projects to hit the cryptocurrency market recently. One of the big issues with mining the traditional way, as Bitcoin is mined, is that it leaves a huge carbon footprint, which is why so many projects are going with the more environmentally friendly proof-of-stake consensus. Kadena has a solution for this too. They don't use the local CPU or GPU to mine Kadena, but rather native ASIC hardware. Sounds great, right? Well, there is one problem. It's very expensive to get set up with this type of mining equipment, and it isn't very rewarding. Currently, the amount of money you would need to invest up front in becoming a miner is about $55,000, and you can expect to earn $370 daily. This means it would take months to get a return on your initial investment if everything were to go perfectly. With hundreds of cryptocurrencies to invest in today, it can be challenging to determine which options have some growth potential. However, with this blockchain's current and upcoming features and accomplishments, it's a project to keep an eye on and invest in. But make sure you do some research before investing in any cryptocurrency and always invest what you can afford to lose. Thank you for taking the time to watch. If you enjoyed it, remember to smash the like button and subscribe to be the first to get future blockchain, crypto, Web3, NFT updates and news.